extraordinary music.
What's going on, Masterclass family? This is your boy, Mr. Adams, bringing you a very quick video on understanding the Masterclass Weekly Process Report Card. This sheet is a relatively new piece, a new introduction to the overall Masterclass trading system, and I wanted to make sure that I took time to explain to you exactly how this sheet works, because this is probably the main sheet, the number one sheet that you want to use to run your trading as your trading operation as a legitimate business. This sheet is extremely important, so allow me to go over the details of how this sheet works and how you are to use it and the why behind it. Okay. So, for those of you that don't know, I worked at Geico for a number of years, and during my career with Geico, I pretty much built Masterclass in my spare time. And while at Geico, I truly respected the fact how the organization was run. I mean, everyone knows Geico. They are very well known for their brand and their marketing, and also their customer service, and they're growing for a reason. And the main reason that Geico grows, I don't want to give away too much of their strategy out of respect for the organization, but I can say that all of the calls that we take working there, they were graded for quality and for the level of customer service that we provided to each customer that we spoke to. And based on the grade that you received, that's how you got promoted. And they had very high expectations on how we dealt with customers, and how we worked on applications from a quality perspective. And for a lot of people, the way that the grading process works is very stressful. I was one of those people, but I was one of those individuals, but I can say that I truly respected the process because of what it did for us at the end of the day. It helped us be a profitable organization. And so I asked myself, well, how can I incorporate this approach, if you will, to trading, to shift it away from being profit focused and more so process focused, because we can perfect and solidify the process of trading and doing the right things when we're supposed to do them, then we're going to be profitable. Just due to the law of averages. If we're doing the right things and we're taking the right shots the right way, then the money will come if we're following the rules and we're following the system. And so that's what this report card is all about. It's allowing us to focus on the process instead of profitability, with the expectation that following the process will guarantee us profits as time goes on. Obviously, you're not going to win on every trade, but if you're cutting your losses and maximizing your gains, then at the end of the day, the numbers should work to your advantage. So the way that the weekly process report card works is that we're going to grade, or you're going to grade your trade, and you're going to give each component either a yes or a no. And there's three features or three components of grading your trade. You have is the opportunity an ideal setup? What do I mean by ideal setup? Is it a low risk, high reward, and high probability opportunity? And I'll share with you exactly what that looks like. The next, did you follow the entry requirement? As you recall in the entry video, we have only three entries. A stock can either be in a demand zone, a supply zone, or a breakout. The breakout consists of either breaking up or breaking down or breakout. Those are the only three trades, only three entries that exist in the marketplace. And once again, referring back to the entries video, if you follow the requirements for each particular entry strategy, then you get a point when you simply follow those requirements and you execute. And last but not least, that you implement the Masterclass exiting strategy, the OCO system, for the strategy that you're taking. So if you're going for a 5-to-1, did you immediately set your OCO exit strategy? If you're doing a swing trade, did you set your OCO exit strategy? If you accomplish those three things, then you get a yes, yes, yes trade. And the goal is to be 90% proficient out of 10 trades. So out of 10 trades, you want to be able to get 9 yes, yes, yes trades. If you're doing over 20 trades in a month, you want to be proficient, at least getting 18 out of 20. And if you do that, the expectation is you should be profitable at the end of the week or the end of the month by focusing on a process. So let me take a moment to elaborate on an ideal setup. So a low risk, high reward, high probability setup is fairly simple. For calls, we want to take advantage of opportunities to where we're buying near a demand zone or previous support or a retest. When we do this, this significantly reduces our risk. And the risk to the downside should be no more than 5 cents to 30 cents as it relates to the price of the stock. Now, that may vary a little bit, giving the type of stock. Like, for example, Amazon has a larger ATR, so you might need a bit more wiggle room. But the amount that you can lose should be relatively small because of where you're entering a trade. And then you should have nothing but upside potential, a huge reward opportunity with at least $1 spread or more. So if this area in here is your entry, you want to at least have $1 or more to your exit target. This particular setup, once again, is a low risk, high reward, high probability trade, which is LLH. Below this level is where you should be getting stopped, losing no more than 15 to 20% when you take the right entry. For puts, it's the opposite. You're buying puts in the supply zone, and your risk should be 5 cents to 30 cents, give or take the type of stock that it is. But it should be a low risk trade. And the downside should be your reward with $1 spread or more. So let's take a look at just a few examples so I can bring this home. So here's an example of JP Morgan that fell down to a demand zone. The stop will be below the 103.26. So looking at that, you probably have 10 to 20 cents of risk to the downside if it doesn't work out. But the supply zone is all the way up to 106. So you have about $2.50 of reward to the upside, and you're only risking 10 to 20 cents on the downside. That's a low risk, high reward, high probability setup. Microsoft fell down to a dual demand zone. So the stop will be below the demand zone, which is about 10 cents away from what the price currently is. So you're looking at about 10 to 15 cents of risk to the downside. Then you get stopped there with the upside to about 112.80, which is about $1 upside. So this is a low risk, high reward, high probability trade. Looking at Netflix from a puts perspective, the risk would be, let's see, the stock opened up went to a high of 372. So about 372.50 would be your risk. So about 50 cents of risk. And we come down to the downside of the previous day's low of 366. That's about $6 or $7 of reward. If you go down to the actual demand zone, which it actually fell to, that's almost $10 of reward. So you have about 50 to 60 cents of risk here at the supply zone when you're buying puts, and about $6 to $10 of reward. So that's what I mean by low risk, high reward, high probability. Going back to the weekly process report card, once again, refer to the entries video on the entries. So you have a demand zone, supply zone, and breakouts. These are the requirements for entering on a demand zone and in the supply zone. And I will say that waiting for a retest in the demand zone on a reversal candle, or waiting for a retest in the supply zone on a reversal candle, is just as important as waiting for a retest on your breakout. because that's going to ensure, once again, that you're minimizing your risk. Now, I will say that requires a lot of patience. It's not easy to do. Sometimes I struggle with that, but when you wait for retests, regardless of the type of entry trade that it is putting you in the best position to limit your risk and maximize your reward if you can simply be patient. And last but not least, did you immediately set your OCO? Regardless of your strategy, if you're going for income, 5-to-1, a double, swing trade, cartel, whatever it is, we have a custom OCO built for each strategy and each trade that you take. And did you immediately set your OCO? So if you do that, then that qualifies you to get a yes, yes, yes trade. And if you focus on that, that allows you to run your operation like a legitimate business owner, and you have things to be able to help hold you accountable so that you can manage your trades and take a look at your analytics to see where your strengths are and where your weaknesses are. And following this process will definitely help you on accomplish your financial goals and your life goals. Just following this report card. Definitely incorporate it into your practice, make it a habit to use it, and then let's take a look at the results and see if it actually improve your results and drive you to greater profitability. Masterclass, dominate.